Hello everyone, welcome to Top Trading Edge. Today we're going to take a look at the Twitter stock and see what's going on with the chart. So many people have the questions about like this stock has been selling since it was $80 and since then it's been selling off and is almost like $36 now. And many people have a question, is this a perfect buy or is this still has a room to go down? If it goes down, how far it can go and when it can bounce. So I'll try to answer all the questions you have, technical questions, fundamental questions, or no, in this video. So let's get started. Before we start, this video is for education purpose only and not recommending to buy or sell any sort of stocks or investment. For your financial advice, please consult with a professional financial advisor. All right, so let's get started. So what exactly happening here since February 2021, almost about a year now. And once they top out at $80, since then it's been grinding lower. And as you can see that here, that every time trying to cross the resistance, it fails. It failed here. So now this is, as you can see here, higher high, higher low, lower high, lower low, lower high. So whenever this is higher high, higher low, right? When it is grinding higher, now it's creating lower low, lower high. So whenever trend changes, we have to also see the resistance. Like if you see, look at the sloping resistance, and it tried one time, two time fail. This is the perfect indication that it is getting rejected. But then also you need to see the force of downwards, where you can see the 100-day moving average, where it's the purple line, 100-day moving average, it crossed. Then it's almost 200-day moving average is close to the red one, is about to test that. But then it doesn't happen every day because each candle represents the one day of the work. But as you can see, the whole one process. But this kind of the trend changes, and if you stay in the hopes he's gonna come back, then there are many stock which we gave the heads up and they never came back. So you have market comes to you, they're not going to knock your door, but you have to find out whether his market comes to you to sell it or to buy it. You follow? So that's what I always try to teach everybody. Say, hey, market not gonna come to you, like not gonna knock your door. They come to you, but you wouldn't even know. So you need to educate yourself, such as creating your financial understanding, technical understanding, and geopolitical. So at least you will land somewhere very close to it. Otherwise, you'll be just like when to enter, basically how to time any of your stock you want to buy. And that's what people do. Imagine people who think Twitter gonna go $80, it was $80, and they think, oh, it's gonna go three digit, right? And when the momentum is there for at the time of $80, many people think, oh, it's gonna go $200, $100, right? So it normally happens. So we do not want to carry it away with those FOMO. Same thing, we don't want to carry it away with the FUD, right? So in market that happens, but we want to listen those, but we don't want to take any action based on what are the headlines are created, what are the analysts saying on medias and all. So we need to analyze ourselves, and these are the real price action. Every candle happens no matter what headline they create, but at the end they have to come here and trade these stocks. When they trade, that's what these are the action happening. So I love to have the real action happening to see that. Now, based on that, I try to teach you here what happened here. So in any stock you try to invest, at least you get to know, you can take some decisions how to analyze. So as you can see, when she's created sloping support, that was the bearish sign. But again, remember, it did not break the sloping support. Now, which one is sloping support? These are the trend line I draw. It started from here, March 2020. It tried to break the support, but then it grind higher. Then again, it tried to support this. It did not break. Then this is the major sloping support. It also tests the 100-day moving average. Sometimes it tests 200-day moving average. But the sloping support is the major support to watch. And as you can see, is bounce from the support, again tested the support, bounce from the support. So grinding higher, high, higher, high, higher, low, higher, high, higher, low, right? So that's what happened. And now you can see I circle this here. This was the major disaster because this was the main sloping support, but it was also people have a hope this wedge. You can see this wedge created here. That wedge is the issue right now. Right here. Oh, sorry. So you see this wedge. That wedge, people think is gonna go, and many technical analysts they always analyze and they think this wedge can, because it's just ascending triangle created, and it can break upwards and or it can break downwards. It can happen either one of the side. But what I at that time what I always wanted to take a look at it, this the most of the time it testing here is testing the resistance 3 times. If it did not grind inside, it just keep trying to break this resistance, so this creating lower low. Okay, you can wait for the confirmation. Sometime, if you have an entry here, you can sell it at here. But if you have entry here, you don't want to wait for the confirmation. Sometime you have to wait. You take your profit and run, and then watch. Let the action happen, because trend is your friend. This process takes almost like from here to here, 6 months, 4 5 months. So once this broke, as you can see that we predicted is going to be a $40, $42. That support was a minor support, is broke also. You can see that, and then it's still grinding. So we did tweet that um, this information. Now many people are asking where it can go. Well, remember, every time stock create the lower high, lower low, lower high. So what happens is it also creates the liquidity in the market to attract the more buyers, right? Because of the price. Because some people likes to buy it at $80, some people like to buy it at $60, some people like to buy it at $50, some people wants to buy it at $35. There are some people who are looking for $10 also, but do they get it? That's up to them. But you know there is a liquidity market maker create. That's why it's called market is made to be perfectionist. So that's what is normally happening on it, and we don't want to be part of that. We want to analyze in our all the technical way. So what we do is, now here market, as you can see from here, almost 15 days. It's been 2 weeks. The market it's been from 2 weeks. It's consolidating this area at $37, between 39 and 33. 39 and 33 area is being consolidating. Okay. Why? Because we have the earning coming in, and in earning, buyer doesn't want to take action. That what if something happens like Facebook happened, right? Facebook stock grind down, stock drop a lot. Same thing happened with Netflix and all. So it's a valid reason to think in a way, because market is like right now trending bearish, though recently is reversed. But again, how long and whatnot, there's a lot of other things we need to take a look at those. So we're gonna go into that. We're gonna go and take a look at into that category. So before we go and take a look at into that category, let's check out the support on this one. Now if you take a look at the next support is at $30, approximately as $30 support. So if you look at the $30 support, how far am I going on $30? $30, I'm going all the way to 2018 support. So 2018 it was $30, 2019 was $30, 2020 was $30, and 2022 it was $30. So several times this support has been tested in last 5 years. So this is, according to me, just based on the technical, I'm just right now looking. We're gonna look at the fundamental also, but based on analysis, what I see, these are the price action. That this is the price where I can find a good support. That's why I wrote down this is for me entry zone heading $30 support for 5 years of work, and $30 could test, and then I like to see the reversal and then bounce. Excuse me, and then probably that could be the case. Now is up. It depends on what will be the market condition at that time. Also, we're gonna take a look at that time. So let's take a look at what is the exactly earnings are. Earning is on Thursday, 10th February. That is CPI data also coming on that day. So 10th February is the earning, and their revenue estimation is 1.6 billion, 1.57 billion is the revenue they're estimating. So let's take a look at the previous one, 1.57. Previous one was 1.6 0.28 billion, and previous was 1 billion. So their revenue, they are going to increase from here to, from this year, when we were in the summertime, when everybody was out, that time their revenue was 1 billion, and now their estimation is more than half, another 50% jump. So which is, I think, based on previous history, I feel like it might not be, but that is another. This is based on the number. I'm just calculating in my head that why I feel that this number will be not achievable. And let's go back to look at the data now. So I'm gonna go to Yahoo, and we're gonna pull the data. So in Yahoo, if you can take a look at it, you can take a look at the Yahoo, and the if you can, let's take a look at the first thing is the, like, their outstanding share. Outstanding shares are, you can see right here, 8 millions of shares. So that means each pie they have to share, each pizza they, I mean, I'm just giving you an example. If you have a one pizza, they have a 800 million shareholder to share with it. So this is a lot, 800 million is a lot of share in the market to, share their profits. So that is a little bit higher side. And also what I need to look for is the forward PE ratio and trailing PE ratio. So regular price per earning ratio is $22 times, whereas forward PE ratio is higher. So I always like to have a forward PE ratio lower than the previous. So these are the last year of PE ratio. I'm not interested into past. I'm interested more into the future projection. So if the future they are projecting this, then I'm happy to achieve that. But in the past, if you look at the past, they could not. So we do not want to. I always believe in below 20 times forward P ratio would be the safest bet, because the more than 20 is little higher ratio, and then we do not have the market condition also. So based on the market condition, so now let's compare with, uh, uh, you know, some people know they have a lot of total cash. They have 7 billion cash, but also they have the debt, almost 6 billion debt also. So they do have a cash in hand extra. If you minus that, it'll be 2 billion in their hands would be, but they did not want to pay off the debt. Now, same thing we compare with the, for example, let's do Facebook. So what Facebook does, what are the final data Facebook says. So Facebook forward P ratio is 16, as you can take a look at it, right? And trailing P ratio, the previous P ratio is 17. So I would at least like Facebook forward P ratio because of the price action, because that is the price we need to follow. These are the times share. So forward P ratio I like here, then over there. Now let's take a look at it, the Google. So at least Google will give you some idea. If you take a look at the Google data, and Google just had excellent earning, right? So forward PE ratio is 25-25. So if the Google has a 25 and uh, Twitter has what? If the Twitter has this much, is more than Google, so I would expect Twitter to be somewhere around 20. So still has a room to lick the air. That's what I would say right now. So based on the number, based on the number, based on the previous history of their earnings, and based on the market condition, today's date nobody wants to jump in a boat alone to go long, because of the Fed meeting is coming in March, and they're going to increase the interest rate. And based on the history, every time when they increase the interest rate, the market always does correction. 5%, 6%, 3%. Not the stock price correction I'm talking about, or the total SPY correction, or QQQ correction. Market tech industry goes 5 to 10% down. So what we need to do is, at that time, we got to be a little cautious. So for me, if I am there and if I'm holding the stock, I would just exit. Even though I have a loss, I would exit and sit on a side until it tested this 30, because I believe that it will be tested this $30 in 2022. Remember, in 2022, because we are very close. But again, the market condition is changing. That is the only reason, because geopolitical reason says that the Fed can come out and announce. And today I also tweet that most important part, which I tweet right here, that if you take a look at the CPI data coming in, and right here, what I tweet here is 1981 and 82, we had the inflation rate was almost like a 8% to 11% at that time. So what was the Fed rate was that at the time when we had that inflation around 8, 11 or 10%. We had the same situation at that time. And if you look at it, the interest rate was 20%, 16%. Fed rate in 1981 was 20%. So at that time, the inflation was 8%, 10%. Interest rate was higher. And I looked it up all the data. Every time their interest rate is, the inflation is lower, and the Fed rate is little bit higher. I looked at all 50 years data. So what we have to do is we have to consider that in a mind, stating that it could happen the same way here, because right now we have an interest rate is 0 and inflation rate is 7. So we have a uneven balance right now. So we need to have that balance nearby. Once we have the proper balance, then we can believe these all the numbers here to follow. Otherwise, we market condition change, it can go to down also. Right here, you see what happened, right? Market changes because of the pandemic. So and then it tested what, $20 and pandemic time. So it can happen, depends on his market reaction. So that's why I said here we got to wait and watch, see how this support happens. So in this, I would not play the earning, because of I explain it to you that the numbers are way higher than expected, and the numbers for even though I understand that it was $80 and now it's $36, so almost like 60-70% off. So many people believe in 60-70% off, so good value. So I do not believe in a good value, or I don't believe in a dollar cost average, because you never know where it can end, because there are 2007, 2008, we had the same scenario, and then market went down to 5, 6, 7 years. We never had an inflation in last 40 years in America, and we are seeing the first time inflation. Jeremy Powell never handled the inflation, though they are trying to be dovish. That is my worry, that the way they are thinking, because this could be a major issue also, I can see. But I don't, in this video we don't want to talk about that thing. But overall together, I'm not bullish on this stock at this moment. I would try to be on a side, even though market has another, until the Fed meeting comes, we have a time. So if you ask me, what happens is, if earning comes out good, just in case, people think, oh, you are always bearish. No, I'm not bearish all the time. There are so many, tweet has a lot of bullish tweet also. I put alert on it. So there are a lot of stocks I'm bullish on too. So on this one, I can see consolidating in between here, and then it can, then we have to see, because always remember, we have to give a time to the market also. So let the market come to you, then I would buy. So you remember, let the market come to you. What do you mean let market come to you? It can go here and it can cross the support, then it's bullish, but the trend is always bearish. Now let the market support, test the support, because we are very close to it, and then let the market decide. Because if the market condition worsen, for example, inflation and all, those are big issues, and I'm thinking that could be major disaster. If, I mean, though the Fed says that this could be a soft landing, but I feel it like I feel it could be a crash landing. Why? And I gave you the example here, because I feel that can happen because of the number I compared. These I found in a history, and I looked it up. Then I created this. So I feel like that. So we're gonna see how it plays, and from there we go on. So until then, if you guys like my this earning analysis of the Twitter, please like, subscribe, and ring the bell button on YouTube, because I'm created this YouTube channel a couple of weeks back, and I needed more help from you guys, to reach the more bigger audience. So I would highly appreciate. Also follow me on Twitter at toptradingedge.com, same name as YouTube, toptradingedge.com, or you can Google Top Trading Edge, one word, and you will find me. So thank you for being here. Good night. Bye.